RBNZ, as expected, hiking by that 50 basis points to 3.5% for that cash rate. Basically, what we were thinking of, pivot, no pivot, at least for Wellington here today. So certainly a lot of questions after what the RBA did with that surprise less than 50 basis point hike of 25 yesterday. Is this really a sign that the market really look at of central bank slowing the pace of tightening? I don't think New Zealand is really quite there yet.
Yeah, the RBA was more idiosyncratic because of the housing market there. The RBNZ, in fact, to your point here, Yvonne, that the monetary conditions need to continue to tighten. They remain appropriate to keep tightening at this pace. They're talking about inflation is too high. In fact, maybe let's get a little bit more context here. Yeah,
let's get to Kathleen Hays, who's been watching out for this. There's not going to be a press briefing from Adrian Orr here today, but Kathleen, what do you make of this decision so far?
Well, the latest headline is really something that they considered 50 or 75 basis point rate hike at this meeting. So we know they are nowhere near the RBA. They aren't thinking about slowing down. They're wondering if they need to be more aggressive, weaker. They are concerned about a weaker growth outlook for their trading partners. But it's pretty clear that inflation is their main focus. So let's call up one of our terrific Bloomberg terminal charts so we can see, we'll call this up first to see what the markets are doing. But inflation is the problem, and they're not ready to slow down yet. Wage pressures are heightened, they're saying. So like other central banks around the world, like the Fed, they are concerned that the longer inflation stays high, the more people are going to expect that it stays high, and they're going to look for wage increases. Again, this is in keeping with what was expected, that 50 basis point hike, but it is the fifth one in the row. And now the implied cash rate for May of next year is up to 4.7%. That's about that's the swaps market view, the traders and the economists. The more hawkish ones, in terms of how hawkish the RBNZ will be, are in that same camp. It's not surprising at all if we've been listening to Adrian Orr. He did say recently, just as recently as last week, that policy now, what their tightening path is very mature. It's well advanced, thinking, well, maybe there's a little room for something suggesting, yes, we hiked 50 now. People are still going to expect 50 at the next meeting in November. And I think if they were thinking of doing 75 then, is the door open now to 75? We've got to watch their numbers, watch their inflation numbers. But their inflation rate's up to 7.3% year over year in the second quarter. That's way higher than 1 to 3%. So it's hard to see them suddenly going, we can slow down. And again, to me, the 75 is potentially on the table now for the next meeting.